The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 30th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential, because living up to our potential, folks, that is something that we must master each and every day. So let's begin our day with an empowering belief or two. And today's beliefs, well, they just simply are in honor of Ed Young, a tiger that will just simply be watching over us today and each and every day forward out here. So let's take a look at these tools, these belief systems. You know, the measure of a man is not determined by his show of outward strength or the volume of his voice or the thunder of his actions. It is to be seen rather in terms of the strength of his inner self, in terms of the nature and depth of his commitments, the sincerity of his purpose, and his willingness to continue growing up. You know, our minds, think about it like this, folks. Our minds are so cluttered with everyday living, we don't, or sometimes we won't take time out for a little bit of prayer out there. Maybe stated another way, how about mental cleansing? But just as we bathe every day to clean, I hope we do, to clean the outside of our physical body, our outer shell, we too must cleanse our inner self. So let's do this. We haven't done this. Let's take 10 seconds. How about if we just take 10 seconds and cleanse our inner self and say a prayer for Ed Young and his family out there? After all, we are part of that family as well. So let's take 10 seconds right now of dead air time. There we go. Maybe we get rid of a little bit of that clutter out there. Let's be reminded, though. Let's be reminded that we are not put here on earth to fool around. There is work to be done. There are responsibilities to be met. Humanity needs the abilities of every man, every woman, and every child out there. You know, nobody can really guarantee the future. The best we can do is size up the chances, calculate the risks, estimate our ability to deal with them, and then make our plans with confidence out there. So, Ed Young, take care, our friend, our tiger out here. Let's go take a look at these markets here right now. We've got the Dow is up 55 points, trading at 15,356. My apologies. I'll get my glasses on here. We've got the S&P 500 up 7 points at 1655. Nasdaq trading up 19 at 3486. We've got the Russell 2000 up 5 points at 992. Nasdaq 100 up 15 points at 3010 out here. New York Stock Exchange up about 0.4%. Up $36 at 94.59, trying to go rescue its stranded passengers on that little island reversal that it created and formed yesterday. Net advancing issues so far today, 882. In order for the Bulls to take the ball back from the Bears, there would need to be 3,598 net advancing issues on the New York Stock Exchange. I don't expect that to take place. I do see the Bears, they've got control of the ball out here, and I think they're going to have control of the ball for quite some time to come. We do have the HUI, that's up 4% here this morning, so that is the big mover out here. That's up $10 and a change out here. Volatility index is down 12 pennies. 12 pennies, it's trading at 1471. It's still well above that 50-day exponential moving average, the area where we see where bears actually have control and retracements take place. Let's start off by taking a look here at the New York Stock Exchange. We take a look here at yesterday. Yesterday, we saw a gap down. Now, the top of the gap was from May 29. Yesterday was 94.50.90. The day before, we had the market gap up. The bottom of that gap from May the 28th was 94.68.92. So we can see that what this did here created a little bit of an island. So far this morning, it's gotten up and it's tested that area by getting up there. But still, you got stranded passengers. But the real stranded passengers are right up up here on that date of May 22nd when the Bears actually took control. It was really the Bulls that fumbled the ball, and they fumbled it in a big way. Nice big bearish engulfing candle. Took back a number of trading sessions as well as a key reversal day. So the Bears have taken control of the ball out here. The Bulls were really going to have to fight to wrestle this one away, and I think the wrestling match, I think it's going to be over for a while, especially as we get past here tomorrow. Tomorrow becomes the end of the month. We start a fresh month out there come next week, so the window dressing time period, fun buying, and so forth will be over very soon out here, and that will allow our markets to take their continued move to the downside. We are in that 6-month unseasonal, unfavorable. We're in the 6-month seasonal unfavorable cycle out there. I know that I can get this out. Now, let's just switch over from our markets here, and let's switch over and let's go take a look at the Nikkei out here, because the Nikkei most certainly has been on fire. Our markets have been on fire. Our markets have been going straight up. The Nikkei was going straight up. In fact, the Nikkei going straight up since November. How about this? It's been going up since November the 16th as well. So the Nikkei breaking out really on the 15th here, coming off of the low from November 14th, just like our markets. And so take a look at this nice little straight line move and what the Nikkei has done in 6 trading sessions. So that's coming off of, that's including the session of May 23rd out there when it got up to a high of 15,942. In 6 sessions, it is 15% off of the high out there. 15,942 closed out at 13,589. We can see that just the normal dead cat bounce area takes the Nikkei down to 13,145. So quantitative easing, schmeezing, or what have you, folks, there, it doesn't matter if there's QE. Markets are markets, and markets are meant in order to be able to trap folks on one side, to be able to make money, and that's really all that's going on outside here in the Nikkei. I suspect the same thing inside our markets as well. So in 6 days, this thing has come all the way back down. Let's just say it's come all the way back down to the level of April the 11th out there. So you're talking April 11th, and this is coming back from May 23rd out there. So about 6 weeks or so worth of trading, 15% in very short order. And if we take a look here at, I'll put this chart up on the screen here. It's not so much a chart as it is a little Excel spreadsheet out here. If we take a look at other the unfavorable seasonal selling cycle out here, last year you saw a 9.5% decline off of the high back down to the around the 200-day moving average out there. The year before in 2011, a 20% correction during this unfavorable seasonal cycle. 2010, a 13.7 correction out there. So, and we had quantitative easing during that entire time. We've had quantitative easing since 2008 out here. And in 2008, of course, there was a 38% decline in the marketplace. So don't be telling me that it can't happen out here. All you got to do is just go and take a look at the data. Go take a look at the facts. Now, even with that, it's not that big of a deal. If we go back here into the daily indexes, if I go back to the New York Stock Exchange, let's do that. Let's come off of November 16th out here. We could actually measure it if we want to. I just need to get control of my mouse here. So let's go take a look at, I'll change these figures around. Come on, baby, work for me. Okay, I can see that my system just wants to test me, just like the universe. Testing. We're going to go from the November 16th low, because what the heck, the Nikkei, we took a look at the Nikkei coming off that November 16th area. Inside the New York Stock Exchange, that would take it to 78.41. Let's come all the way back up to our day of May 22nd, same day that the Nikkei moved down as well, or began its move down here. So one way you could look at it, you could say, hey, Steve, the U.S. markets are stronger than the Nikkei. Yeah, okay. Maybe. The Bulls have fumbled the ball. They've fumbled it in a big way out here. Now, if we take a look at the New York Stock Exchange, the dead cat bounce, that will take it just down to 89.87. A 618 retracement gets you to 85.49. Let's just go ahead on the New York Stock Exchange. Let's put the exponential moving averages up here on the screen. The black one is the 200-day moving average. We'll just come to April 29th. We'll just take a look and see what it was on April 30th. I apologize. Don't know why I wanted to go to April 29th out here. You had it at 85.84. So 85.84 and 85.49, which is the 0.618 level. Sure looks to me like that is where the New York Stock Exchange wants to travel down to during this 6-month cycle. And it could take 5 weeks to get down there. There will be plenty of bulls trying to buy the dips out here. And each time they try to do that, they're just simply going to get trapped here. What I would be doing is I would be looking to buy right around that 85.50-ish, 85.80-ish area. Of course, you're going to want to wait for a pattern to set up. In fact, just getting down to that level, which would not be, we can go take a look at intraday charts and take a look at 618 retracements all day long out here. So why wouldn't that happen on a daily chart? It does as well. And if we take a look at the January 2nd breakout, well, that level is 85, the low is 85.71. The high is 86.32. So why wouldn't a equity market come back to an area where it had broken out from? Well, it would out there, folks. So that is really what it is that you should be expecting, at least in my opinion, out here. And that's by taking a look at the New York Stock Exchange. That is the wider swath, the wider breadth of the marketplace, and gives you a better feel for what really is going on inside the overall market environment. Let's go take a look at the other indexes, though, as well. Let's go take a look at the S&P 500. Let's start off there. Then we'll go take a look at the SPYs as we take a look at the S&P 500 out here. It's traveling at 1654. Yesterday got just slightly under that 1650 area. We talk about 1650, or I speak to you about 1650, just simply as being the bottom of this primary trading range that it has gotten above, slightly below, even though it was, yesterday got down to a low of 1640. It's 1640 if it had closed there. Then you could say, okay, now with some conviction, you're back inside the lower part of that primary trading range, and that sets up a move down to the 1550 level. But right now, it's just really hanging out around that area. I suspect we'll see the S&P hang out around here for the next, tomorrow I expect to see it in this range. I don't expect the bears to let things get out of control here. Nor do I expect the bulls to be really exuberant and actually take out the highs here from May 22nd. That level is 1687. So I suspect here over the course of the next couple of days we'll stay in this little range before we start to see our next move down inside the S&P 500. Where is that next move down going to take us to? Well, during this cycle, you can expect that the S&P will get down to around the 1586 range. That would be your first target. More likely, I would say, really coming down and probably testing this hammer. Well, 1576 for sure. 1576 would be a normal test. That is a test of getting back to the consolidation that the S&P 500 broke out of. So if we take a look at, 1576, where did I say the 200-day moving average was? Was lower than that, I know, but let me see here. What was that number? It was 1470 out there. But 1576, that is absolutely in the cards out here. And in fact, if you're a bull, you want to see the market come back and test that consolidation area, reject it, and then move higher, because that would be the most bullish case that I could find out here inside the S&P 500. Let's go take a look here at the SPYs. Let's see what the SPYs are doing here on a daily chart. Give me a moment here to pull up the SPYs. So far today, volume inside the SPYs, and they're traded at 165.88. We're seeing volume of 28 million shares. Yesterday, a move down with 160 million shares. So we've been trading for about 45 minutes out here. Not too bad from a volume standpoint. 877-927-6648. Dow's up 45. S&P is up 6. We'll be right back, folks.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at tfnn.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow is up 54. S&P is up 7. Biggest movers in the market here this morning, percentage-wise. You've got the HUI. It's up 4% out here. So we'll go peek in on that. The gold miners, silver. We'll go take a look at that. You got gold that is up $23 right now. That's at 14.14. So I'm starting to become a believer, at least at a run to that 15.35 level as a test out there, and then we'll see what happens once gold does get up there, if it does. Also on the move here, up about 1% right now, is the Queen, the euro. It's up 122 ticks, trading out at 1.3055 right now. So we can see a nice wide-ranging bar here today. A lot of time left in the trading session. As we take a look here at the euro, coming into that point, 618 with a wide-ranging bar. That says, hey, maybe this wants to make that 0.786 retracement out there. That would take into 131.46. But let's go down into the intraday chart. Let's see what the intraday chart, the 30-minute chart, is showing us, if anything, out here. So we take a look here at the euro number one. As you take a look at this chart, if you're watching us on Tiger TV, that's a wonderful thing. Maybe you're listening on your mobile device or a radio station. And thank you so much for doing that. Remember, you can catch the live stream of this show by going to the homepage of TFNN.com. Over on the right-hand side, you'll see that button, 3 little smartphones. Click on that, and you'll be able to catch this show streaming live. And as long as you're over on the homepage of TFNN.com, it is May 30th. That means there is only one more day left for you to take advantage of the Tiger Dollar promotion that we have going on. Now, this is a promotion that you absolutely want to take advantage of. It's a way for you to invest in yourself and to generate an additional 20% off of your money. So that is a beautiful thing. Now, in addition to that, not just will you get a 20% bonus for every Tiger Dollar that you purchase, Tom is going to go ahead and donate either 5% if the purchase is anywhere between $500 to $1,000, or 10% if it's over $1,000 in the one fund. That's a tax-deductible contribution made on your behalf out there. So rush over to the homepage of TF. And if that's not good enough, well, Tom is going to be good enough to do 2 3-hour sessions live coaching, trading out there. So it is a great, and the only way to get that is just simply to sign up for Tiger Dollars. So do yourself a favor, go sign up for Tiger Dollars and take advantage of that. Now, as we take a look here at the Euro-US dollar 30-minute chart out here, we most certainly can see a bottom that was formed out here at 10 o'clock on May 17th. We see another higher bottom that was formed out here at 3 at the price point of 1.2824. We see another higher bottom out here at 230 at the May 29th level. What do we see? We see 3 higher highs out here. So that is a little bit bullish coming off of this swing point high out here at 10 in the morning on May Day, May 1st out here. So we'll take a look at a couple different possible retracement levels, see where we might find some resistance. We're also taking a look at the relative strength, relative weakness indicator on the chart bottom of my screen out here. We can see on the 30-minute chart moving in towards that overbought territory. So let's come off of the May Day swing. Well, let's come off of the May A swing point first. That high is 1.31829. We'll go all the way down to now. We're always going to be using the same anchor low out here, which was the session at 10 a.m. out at 1.2795. So you can see we're already above the 0.618 level, and you're through that with a wide-ranging bar. That says 1.31 is really the next target for the euro. Now, let's come. Did I hit the right number? Looks like I didn't. Let me do that again. Looks like when I grab, it's not going to be that far away from that, but let's grab the right. Boy, oh boy. Must be these fat fingers of mine out here. Well, that's going to have to just simply be close enough because for some reason my pointer wants to pick out that area. So right around the 131 level. Let's come back and let's take a look at that May 1st swing point as well, or approximately the swing point high, which was at 8:30 in the morning during that session, right around 1.3241. That one got the actual high out there. Let's come down here. Let's make that a little bit darker. And so we can see that the 0.618 level is about to be tackled. That is 1.3071. So you're moving into a overbought condition. You're coming into that 0.618 level. I would say that we would expect to see the euro start to back off a bit, anywhere between here, where we're at right now, and that 1.31 area. And you'll know that when you start to see the bears take control. You'll see some type of bearish candle form. May not be a reversal candle, and if it's not a reversal candle, you most certainly wouldn't, or I wouldn't recommend that you go ahead and you sell it short. But what you're going to want to be really paying attention, and what I'll be wanting to pay attention of, is on the move back, is it just simply going to be a 0.618 or a 0.786 retracement? Well, that would take it down right around the 129.2 level. And if it does that, what we'll then see is our fourth lower high in the marketplace. 877-927-6648. We'll be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term long-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 59 right now. S&P up 8. Movers, we got Priceline up $17 and change, almost $18 right now. In the gold miners, we got Rand Gold up 4%. We'll see if there's some volume behind that move. Royal Gold, RGLD, up 4.5% as well. Tesla Motors up again today, up $2.51. So we'll take a look at some of these. We're going to start off, though, taking a look at the XAU. We've got the weekly chart up on my screen. The XAU, Philadelphia Gold Silver Index out here. Now, this is the weekly chart we've got up on my screen. Now, in the weekly chart, we can see as price moved down the week of April the 19th, big gap down, actually, so we have to respect that gap. If you take a look at this index, you do not see very many gaps out here. In fact, I'm just scanning visually, and I don't know if I see any other gap out here. Is there a small gap? I don't see any other gap. So you have to respect that gap down, and that was the gap that was created from the low of April 12th That level is 116.18, and the high of the prior week, which was 114.39. So a little bit of a gap there. Should be a natural area of resistance. We'll see is somewhere inside that gap, natural area of resistance. We'll see how the XAU deals with that as it gets up to those levels. You can also see on the weekly chart very, very oversold. So we know that a market, in order to work off an oversold condition, has to just move sideways to bounce up out here. So it's doing what it normally should do. If we take a look, and it moved a little bit lower the following a couple weeks later, a little bit of a continuation pattern, quite frankly, because if you take a look at these small-bodied candles, the weeks of April 26th, May 3rd, and May 10th out here, small-bodied candles traveling with inside this wide body, and then we had some additional follow-through here. The week of May 17th, that was actually a continuation candle to the downside. Didn't really continue much, did it? And in this case here, we didn't see any bulls really rush in last week. That's certainly not a reversal candle. You would have to actually stitch these 2 weeks together, which I'm not opposed to doing. What you're looking for this week here is you are looking for a close above the open of May 17th. That open was 107.66. You're at 108.05. But you've got a nice long-term 0.786 Gartley buy pattern out here. You can see the expansion of the B to C swing point. That is the swing point I'm referring to of the May 18th low, 140.94, all the way up to the high that was put in at September 21st out at 196.72. You can see about 1.76 is the actual percentage increase there, but that's close enough for me for my work for a 1.618 type of move here. So nice Fibonacci numbers really coming together on this stock chart here, and you're coming out of you're bouncing out of an oversold level. That's on the weekly chart. Now let's go take a look. Let's go over and take a look at the gold buck index, the HUI out here. And we'll just switch over because they're really very similar. This way we'll just take a look at the daily chart. Now, on the daily chart of this, we do see some bulls here as the market was moving down. And you can see the bullish engulfing candle inside this index here. And really, not only was it bullish engulfing, it was also a key reversal day out here. And that key reversal day, well, I'll switch over on this one. We'll switch over to the weekly chart as well, because I want to be paying attention to whether or not it can clear its swing point on that bar on the weekly basis out here. But on the daily chart, just taking a look at it, on the daily chart you can see where the bulls are hanging out, and that's simply going to be the lows here of May 20th. So if you get a close below 244.62, that would be very bearish out there in the marketplace. But you can see you got the bulls, and it was a key reversal day. You were coming from an area of being oversold, so that was your extended condition. Your high and the low exceeded the prior session, which was the May 17th session out there, and you closed in the opposite direction. So key reversal day, just like we've seen a key reversal day in most of the indexes up at the highs out there. Now, and you've gapped up here this morning. Another little bullish sign here on the HUI. So that is let me just refresh my screen here. So that is another positive sign inside of this index here. Now let's take a look at the weekly time frame on this. Whereas on the XAU, there we go. So on the weekly time frame, you're also very close to getting above the session from May 17th. That open was 275.59. You're 274.78. That's what you want to be taking a look at. It will run into some resistance here at the April 26th high, right around 293.47. There's a gap out there to the low of April 12th, which is at 301 even Steven out there. Now let's go take a look here at the GDX. Let's go see what kind of volume it is we've got behind that. That is one of the ETFs that you could be taking a look at. And the issue that we've got here inside the GDX is going to be this high volume downdraft day of April 15th. 74 million shares to the downside out there. So we know that if we take a look at yesterday's move did not get us into the candle. You are in that candle here today. You are in it with a volume of 12 million shares in about an hour worth of trading. So that is actually positive. If we'll go take a look at the straight line method here, we'll take a look at a 10-minute chart or something. If you were to take 12 million shares, if the volume could maintain this pace out here, 12 million times 6.5 would give you 72 million shares, and we had 74 million shares to the downside on April the 15th. That would be very bullish, knowing that you're now moving into the area where it broke down with volume out here. Key reversal session most certainly on May the 20th out there. A little gap up today. That is bullish for sure. And so volume-wise, now let's just simply come down and take a look. Now, if you take a look at the moving averages here, the 4 rainbow moving averages, still nothing here is bullish with regard to that. Now, this is a lagging type indicator out here. You can use the candles and other patterns as your early entry areas, but you're going to want to start to see, for example, the 8-day get above the 21-day. That's the black line if you're watching Tiger TV or if you're watching the charts out here. You're going to want to see that for sure to give you another indication of a possible reversal that would be underway. Let's come take a look at the shorter-term chart. Let's see what kind of volume we've got inside this. So when we opened up this morning, you had volume of, this is a 10-minute bars we're looking at, 1.5 million shares at the open. The next bar, 1.8 million shares, not bad. The next bar, 2.1 million shares, not bad at all. The next bar, 1.7, 1.7, 1.1, so volume tapering just a bit here at 10:30, and then 819,000 shares at 10:40. So starting to fall off here, which is pretty much normal after the after the first hour of trading or so. So we'll see if volume can pick up on the intraday chart here. Yeah, most certainly way into the overbought range. And you can see every time that occurs here on a chart, once you get into those extreme overbought territories, the market will pull back. So do you need to chase after this thing? Is this the area where you should be buying from? I venture to say no, you don't need to do that. Just let, if you are looking at this, if you're interested in this, let this thing go ahead and pull back. Let it work off this oversold condition. I can go ahead and pull this back here. It won't stay in oversold or overbought territory for a real long, extended period of time out there. It just doesn't work that way. It's the it's the way that the markets work out here. I'll pull the GDX, it's the 10-minute chart out here on the way back, and you'll see that if you just simply pace, you want to try to buy when the RSI gets down in towards that 30-ish level. It doesn't have to be 30. You don't have to wait for the very bottom out here. Just wait for just be able to line it up, maybe with a test of a swing point with lighter volume. You certainly don't want to see it pulling back with volume. If it's pulling back with volume, that would be a negative aspect. So take a look at some type of intraday chart. It doesn't have to be 10-minute. You can go ahead. You can switch it down to the 30-minute chart. You're going to see, when you do that, you're going to see different levels of either being overbought or oversold. But even on the 30-minute chart out here, as we take a look at it, let's get rid of the stochastic line out here. You can see even on the 30-minute chart, it's in that extreme overbought territory. So let it work its way off. And by working its way off, it may just simply come back and test the gap up from today. Could be somewhere around 29.05 or so. It's at 29.64. But let it go ahead and do its things and recharge its battery out there. But so far, so good on the GDX. Now, I don't have the weighting structure in front of me. And I'm not going to go ahead and have some dead air time. Maybe somebody in the den. I think that Barrick Gold might be the largest weighting in there. Maybe somebody in the den knows the. Well, I probably can actually look for it here while I'm doing something else. I can multitask out here. So let me see if I can do that. That way we can actually see what's going on inside the equities. But I suspect we're going to see the same thing out here. But just give me a moment. Take a look at the GDX. And I'm going to take a look at the top 10 holdings. Thanks, Terry. Terry says that ABX is the first holding inside there. This is not going to be updated here, but Barrick Gold is 12%. So let's come over. I'll take a look at a tab here. I've got my number of the gold stocks out here. And let's go take a look at them. By the way, I was taking a look at Harmony earlier during a break. That has gapped up nicely. And Harmony here had actually tested the high volume low. Now, Harmony, HMY, is the ticker symbol. Let me see if that is even in the top 10, and it is not. But I did have Harmony up on my screen. If we take a look at the high volume low that this generated on May 20th, that level was 363. 8 million shares, and it got down there yesterday. It got down to 361 with 3 million shares. 3 million shares testing 8 million shares. That's the type of test that you like to see out here. So you can see a test of the lows inside Harmony Gold, and you're getting a gap up this morning, and you've got volume behind it. So we're seeing a sign of strength here. You see 2 million shares. Yesterday's volume was only 3 million shares. We've only been trading for an hour and 15 minutes. So what you'd actually like to see, if you're patient, is you'd like to see this continue today, and then watch this equity pull back and test that sign of strength and do it on lighter volume. That would be a nice setup for sure, but that was on Harmony. That's not in the top 10 holdings. So let's take a look at some of those that are. Let's take a look at Barrick Gold, ABX out here. Like I say, it's around 12% of the GDX. If we take a look at this, let's see here. We've got this. Let's take a look at this high volume low and see how that test was handled. Now, on Barrick, we didn't see a test of the bottom like we did on Harmony, unfortunately. You'd like to be able to see that. That session would be April 17th. That high is 1911, low is 1751, 55 million shares out there. Most recently, we had a test here of the high yesterday and the day before. So let's take a look at, now those tests most certainly were on a much lighter volume. Again, it's 55.6 million shares. The test here from Tuesday was with 15 million shares, and yesterday was with 16 million shares. So that area has been tested. You'd like to see a test of the low. You don't always get what you want. Or maybe you do get what you want. Sometimes you just have to be patient. So we've got Barrick Gold, ABX up this morning, gapping up this morning. This has volume behind it, 11 million shares. 11 million shares, an hour and a half. It's got the big downdraft. It's over. It's it's trying to get over that area, which is the session from April 15th. That's got 58 million shares. So if volume were to keep up on this thing today, that would have some pretty decent volume. If not, just wait and maybe try to buy the breakout, or maybe you don't buy ABX. But if you're going to trade the GDX, it is a good idea to know what the top 10 holdings are doing. Why? Well, if I just do this mental math here, let's see, you got 12, 23, 33, 43, 53. You've got the top 10 holdings are like about 55 to 60% of the weighting structure inside there. I don't recall how many total holdings there are inside the GDX, but it's probably in the 30-plus range out there. And let's go take a look at number 2. Let's go take a look at Gold Corp out here. GG is the ticker symbol. Let's go see what it is doing out here. Inside Gold Corp, it has a... its high-volume bar didn't really have a substantial high-volume bar after the April 15th session. That had 19 million shares to the downside. What we did see was a key reversal session here on May 20th, 7.7 million shares. That took out the that was actually it was nice because it was a key reversal area, and as well was testing the prior session, which had 9 million shares. So it was a test on lighter volume, key reversal session, not too bad. Taking out a B point of a small A to B equals CD up. That B point would be May 22nd. The top is 2802, and that's got 9.5 million shares. So far today, 2.5 million shares, so it should have that volume to go ahead and take that. But that's a small A to B equals CD. That A to B equals CD pattern would look something like this, and the 1-to-1 is what it's already hit. But that says it wants to go higher because you've gapped up into the 1-to-1 A to B equals CD. Volume, again, so far, 2.5 million shares today. What you'd like to see is you'd like to see this close. Well, let's take a look at how it's going into the most recent swing point. Its most recent swing point high, which was, this gap here has actually been closed. So I'm not even going to consider this gap inside of Gold Corp to really be an area of resistance any longer. Certainly volume from a selling pressure standpoint, but that gap is closed. That window is closed. The gap that is open is the one that's right above it, which was created on May 11th. So it looks like the target on this would be about the 31.13 level before it gives you information. Now, the last swing point up here inside Gold Corp was on May 9th, 7.5 million shares, and you're coming into it with some volume. 2.5 million shares today. The low of that is 29.57. What you'd like to see if you're in the GDX, you'd like to see it come into the 29.57 level with more than 7.5 million shares. Those two equities alone, Barrick Gold and Gold Corp, represent 24% of the market. So you better like those two stocks if you are inside the GDX, and you also better like Newmont Mining and Silver Wheaton. And Yamana Gold is a part of the GDX. This is a part of the top 10 out there. Anyways, 877-927-6648. The Dow is up 63 points right now. S&P is up 9. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks, and definitely stay tuned. It's going to be a special hour with at least an hour, I guess, with Basil Chapman today, and he's going to be doing his show live. Of course, he always does it live, but today's going to be different. He's out there educating tigers and tigresses, so a very cool show. We look forward to that. I know he's getting all prepared out here. As we take a look at these markets coming in right now, you've got the Dow is up 65, the S&P is up 8.5 points out here, and what I've got up on my screen here is the S&P Volatility Index, which is up really 1 penny over yesterday's close. So, folks, this is not the normal behavior that you have seen in the past. If you're watching us on Tiger TV, the top portion of my screen, well, that is the VIX index here, and the VIX is above that 50-day exponential moving average, which, by the way, right now, today, as we speak, would be at a level of 13.64. We're at 14.84. So you got the markets moving up. You got the VIX unchanged. We'll call it up a penny. Not a big deal out there. The big deal is that it's not moving down. And it's not moving down with any kind of significance out here. Options traders are telling you they are getting twitchy out here. I think they're getting ready for the June swoon out here, so I think you should as well. Now, it always depends on the time frame that you are trading on. You know, your longer-term accounts out here, you should be expecting a pullback, a retracement out here, and it could be much deeper than we believe. You know, the key here, I would say, in the S&P, if you're long the S&P and your long-term funds, you know, if the S&P gets below 1576, which I project that it will, that would be a very negative thing, because that would get you back inside the lower part of the range out there. And just like the bonds, we took a look at bonds and breakout areas just as bonds got back below their level. It's a negative thing. So we'll see what happens. You got to take this one step at a time here. Again, taking a look at the marketplace, you got the King back 64 ticks here right now, but light sweet crude still tackling these two hammer candles out here from May 23rd as well as May 15th out here, slightly below them. But that's got to make you say, something to think about in the marketplace. Quick peek here at bonds. As we pull up bonds, not a huge movement in bonds to the downside with the market being up. I suspect we're going to see the bonds actually still try to make another run for the highs out here, which is in the 149 level, but one day at a time. Couple of stocks here. Let's see, popping and dropping. Let me go out and take a look and see, switch tabs out here. Priceline, MasterCard, Intercontinental ICE is up 463. First Solar is up, Tesla's up. To the downside is CV Energy, Big Lots, Public Storage, PSI is trading down just a tab. Let's go take a look at Priceline out here. Priceline had an island reversal. I think I may have that on my show tunes or my show charts tab, so let's go out there and see if I do. PCLN is the ticker symbol. I don't, so let's go put it out on the screen here. And these are important charts, not CLN. These are important charts to be paying attention to, especially Priceline, because Priceline truly has been a leader out here. So that island reversal still in play out here, and that island reversal, as you can see, was occurred over a 4-session period. The first session was the session where it gapped up from. That was May 17th. That high was 814.58. You can see the gap out here, 2 candles, and then a gap down on the session of May 22nd. It's actually very bearish. I saw someone in the den. I apologize, I wasn't paying attention to who posted it, but in Facebook, Facebook has a island reversal bottom out here. So we're starting to see potentially a bullish pattern inside Facebook. And Facebook came back into an area where it broke out from, which was the trading sessions of November 23rd and the November 26th, and it came back in there with lighter volume. And today you've got a island reversal bottom. That's a bullish pattern. Folks, stay tuned. Basil Chapman is up next. Have a great Thursday. Always remember, the way you do anything is the way you do everything. Become a pioneer of your future. Do not be a prisoner of your past. Have a great day, folks. See you tomorrow morning.